Are you tired of struggling to find a trading strategy that works for you? Do you feel overwhelmed by the complexities of the financial markets? Well, you're in luck, because today, I'm going to introduce you to a game-changing trading strategy that's designed specifically for new traders, struggling forex enthusiasts, and scalpers alike. I'm going to show you the combination of indicators to use and the rules to follow. This strategy isn't just about making a quick buck. It's about empowering you with the tools and knowledge you need to thrive in the world of trading. So, if that's something you're interested in, grab your notebooks, buckle up, hit the like button, and subscribe if you're new, and let's dive right in after the intro. Welcome back. Let's get started with this strategy. Rule number 1. We have to trade with the trend. To be successful with this strategy, we shouldn't trade against the trade. What I mean is we should follow the trend, and we can only know the direction of the trend by using moving averages. Here, we are going to be using the 50-period exponential moving average. So let's add it on our chart. To add it, go to Indicators tab on TradingView and search for EMA for exponential moving average, and go to Settings and set the length to 50. This will give us a 50-day moving average. So with this rule, we will only buy when the price in the higher time frame and lower time frame is above the EMA, and only sell if the price is below the EMA. Now we know rule number 1. Let's move to the rest of the rules that must be met in order for you to enter a trade. So let's move to rule number 2. Rule number 2 involves use of momentum candles. What are these momentum candles? These are large candles with large shadows, but with small or no wicks. Now this is how we should use these momentum candles. First, go on a higher time frame and see the direction of the trend, meaning bullish if the price is above 50 EMA and bearish if the price is below. In this strategy, the higher time frame we shall be using is 1 hour and the lower time frame is going to be 5 minutes. Let's say on 1 hour we're above the 50 EMA. Here, we have to move on 5 minutes. On 5 minutes, the price at first should be below the 50 EMA, then it should cross this EMA with a momentum candle and close above. This now makes the trend on the lower time frame to be in the same direction with that on the higher time frame, and with this, it makes rule number 2 valid. Let's move to rule number 3. This rule involves the use of RSI indicator. Most of the times, the RSI indicator is used to see if the price of the market is overbought or oversold, but with this strategy, we are going to use this indicator to see the momentum of the price in the market. With this, for an uptrend, we only enter a trade if the RSI is above the white line and yellow band, and vice versa for a downtrend. To add this indicator, go to Indicators tab and search for RSI and add it on the chart, and then go to Settings, then to Style and the to Middle line, and change it from a dotted line to a line. Also change the color to white. So let's go over what a successful trade would look like. However, with this strategy, we have 2 entry techniques to use. Technique number 1 involves entering a trade after the close of the momentum candle with 1 to 2 risk to reward ratio. Disclaimer: this entry technique is riskier since the price of the next candle may first retrace to fill the gap of the momentum candle before heading in the direction of the trend, hitting your stop loss, so I don't recommend it for new traders. Technique number 2, and it's my favorite. With this, we have to first wait for the price to test the EMA after the break, then we place a trade at a retest with 1 to 2 risk to reward ratio. Now let's see some quick examples. Starting with higher time 1 hour, it's a clear uptrend as we all see. The price is trading above the 50 EMA. Now let's move on our entry time frame, the lower time frame 5 minutes, for more confirmation. On 5 minutes, the price has respected the rule of first being below the 50 EMA, then after crosses the EMA with a momentum candle and closes above it. With this, it takes us to rule number 3 of RSI. On RSI, we are above the middle white line and also above the yellow band. Now all the 3 rules are valid and we are good to go. Let's use technique 1 to place this trade with 1 to 2 risk to reward ratio and watch how it goes. The trade continues and reaches our target. Remember, the same applies for a downtrend. So let's move to technique 2 and I show you some example. Using the same chart, and we all know the overall trend is bullish. So on 5 minutes, we have all the rules respected. First, the price was trading below the 50 EMA after broke and closed above with a momentum candle. The price continued bullish and after retraced and tested the EMA. On RSI, it's above the middle white line and yellow band. With all that, we can enter this trade at a retest with 1 to 2 risk to reward ratio. Now let's watch how it goes. The price continues bullish after a retest and hits our target, so traders, you can backtest this strategy to be perfect with it before using it on real account. Now, if this video was helpful to you, hit that like button and subscribe if you're new. This gives us more energy to create more videos for you. See you in our next video.